Hi, welcome to Bond Bytes, a daily bond market highlights from INR bonds. I'm Arjun Patsati, and the ECB is under immense pressure to control inflation, which is running at record highs in the Eurozone, and how fast and how quickly they will hike rates and also remove all that excess liquidity that they've given to the markets. That's the markets are waiting the outcome. And before we go, come into our webinar for tomorrow, tomorrow Friday at 4 p.m., where I talk about the overlook on debt markets, the credit market outlook, and where should fixed income investors invest in this current rate hike scenario, where rate hikes, withdrawal of liquidity, and inflation is the theme of the markets and for investors who are struggling to find the right answers. So the webinar will help for financial advisors and investors find the right answers on where to invest in the fixed income markets. Also, if you're a retail investor, download our app, We Can Invest by INR Bonds for the best bonds to invest in a time when there's so much of rate hikes and there is a lot of inflation that is running very high. The investors will have to beat in inflation in their portfolios. The best bonds are available in Quick Invest with the most information, proprietary risk score, and the best, most transparency, and the easiest of investment processes. Download the app now.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Coming back to the markets, so as I said, the ECB president, Christian Lagarde, ex-IMF president as well, is struggling to contain inflation, and the ECB is far behind where it was. Even the US Federal Reserve has started to hike rates. RBI is hiking rates. Bank of England is hiking rates. ECB is yet to start, and they will have to do it much, much faster than where they have been now, given that the citizens in Europe, especially the savers, are really struggling to fight inflation in their savings. In Indian markets, the government bond yield was slightly down. The Sensex and Nifty was higher. Rupee also was better. Was the US Treasury yields stay at 3%. And as I said earlier, the whole talk is about rate hikes and inflation in markets. Thank you for listening in. Do not forget to attend our webinar. The link is in the description below for attending the webinar. And if you're not subscribed to our YouTube channel, please do so.